I wish I could say that the markets are excited. It's 1 year since the intervention, and you've seen the NSE index come down significantly over that period. However, we have seen some recovery, particularly today in the session today. We saw the NSE index up 68 basis points, and that was driven largely by gains by several banks, particularly Guarantee Trust Bank and Zenith Bank. However, I think there's still that general uneasiness about the equity market right now. And joining us to give us some perspective on what is moving this market and maybe looking a little more about the fixed income as well is Pabina Yinkere from Access Investment and Securities. Thanks so much for coming to the program. Now, let's first of all talk about Sanusi's speech on CNBC earlier today. What were the key takeaways for you? He obviously talked about an update on AMCON and, of course, four banks in particular. What were your thoughts on what he said?
Yeah, thank you, Wole. It's been 1 year after the intervention by the central bank. And over this time, with the benefit of hindsight, it would appear that some right decisions have been made. There are questions about some other decisions, but I think over time we'll see if those decisions were exactly right. For me, the key takeaway is the interest in these rescued banks. It's important to know that there are lots of investors out there that still see value in these banks and are willing to take positions in this bank. Investors from foreign investors and local investors as well. But what wasn't so clear was the funding of AMCON. Sanusi mentioned that there is no funding gap, but we continue to look at these numbers, and from our analysis, it appears that there would still be some funding gap. I think his response to that question wasn't so clear. Because if you look at the 250 billion authorized share capital and then the contributions, 50 billion from the central bank and the 0.3% of assets of the banking industry, which would come to close to 45-50 billion on its own, we still have some grounds to cover on that. So I guess the CBN clearly has to explain to us subsequently how it plans to fully fund AMCON.
Right. Anyway, like you said, for me that was also a very sticky issue. But let's talk about the equity and fixed income market now. And we've seen there has been a bit of a correction in the fixed income market. And how is that affecting your assessment of both markets? Where will you go right now? Will it be equities or will it be fixed income?
For looking at the fixed income market, we've basically seen a correction at the short end. The 2, 3, and 5 year instruments have seen some correction. So if you look at the yield, there is a hump on the short end, and then it smoothens out as you go further down. Partly responsible for that was the new auctions, new bonds that were auctioned at a higher yield. So a lot of investors moving back into those short end instruments. Looking at the bond market as a whole, I still think lots of the bonds are still trading at a premium. I still think there's a lot of correction. We're going to see more correction on the long end. The 7 and the 10-year bonds, which hardly trade, there has to be some correction there. If not, we'll be looking at a very distorted yield curve. So for me, in the fixed income market, I think the value still remains at the short end. It's good to go short now. Anything long would be playing pure risk. But overall, I still think equity markets hold more value, more returns. There's been comments in the papers, I'm sure you would have seen it, that equities market are yet to react to all of the reforms that are going on, and rightly so, because I think there is still a lot of uncertainty in the system. There is still the issue as to what's going to come out of the NSE audit that is currently going on. We know that the DG was recently removed from office, and then they're auditing the exchange itself. How that will pan out, investors are still not so sure on one end. And on the other end, I think the forthcoming elections still leave a lot of room for investors to be wary about really committing fully to the equities market. As we know, the current president has not declared that he's going to run for presidency come 2011. There are also other candidates which a lot of people might not favor, but then basically a lot of uncertainty on the political scene. So I think those two reasons are really, and of course, AMCON yet to fully take off. There are lots of modalities that need to be worked out.
So just the speed of that takeoff is also
the speed of
weighing on
that
the
takeoff
markets
is
right
even
now.
having its impact on the market. So by the time you combine those three things, you probably understand why the equities market has not taken up. But then I still think there's a lot of value in the market.
Right.
We're trading close to the 6-month low. And if you look at the moving averages of the NSE index in the last 6 months, we are beginning to observe a convergence. And what that tells you among the short-term, the mid-term, and the long-term EMAs. And what that tells you is that lots of uncertainty when moving averages begin to converge like that.
Okay. Unfortunately, we have to wrap up very quickly, but just one stock pick. Which one is good for you? Obviously, since you like the equities, we can't talk much because we're out of time.
Yeah, I still think the banking sector holds a lot of value, irrespective of the reforms that are going on. I still think, for us, we think banks that would win are banks that are focused at the bottom of the pyramid.
So which one in particular?
I like Fidelity Bank. They're focused on that mid-tier retail market, and of course, they play, it's currently undervalued.
Okay, all right, thanks. We'll have to leave it there, unfortunately. Thanks so much for coming on to the program.
Thank you, Wole.
All right, that was Pabina Yinkere giving us his thoughts on the equity market and, of course, the fixed income market.